All right, and welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So markets rebounding pretty nicely. We had a historic week here. Take a look at the VIX. We talked about the VIX last week, but we hit a 66. That has happened precisely 4 times ever. And the other times it happened, one was this week. We had COVID, we had the GFC back in '08 and 1987. So massive blow up here in the leverage short vol trade. But markets are rebounding very nicely. I talked about this on Monday, and I said this is honestly not a time, contrary to popular beliefs, not a time to be a seller here. When you get these historic spikes, historically, it shows that it pays to buy into fear. Now, that doesn't mean that we're going to necessarily go straight up here, but this is a very good bounce. S&P up about 250 points, currently off of the lows. And as sentiment here, sentiment shifting very quickly. We had the biggest 2-week change in the Investors Intelligence Survey since 1987. So a lot of people getting very bearish early this week. We also had AAII. Bears shot up from 25 to 37. So people getting very bearish, positioned very bear. We also, I don't have data on it, but I did hear that there was a record amount of puts bought this week as well. So investors panicking to hedge. And, a lot going on here, but market is rebounding, and, that's why they say to buy into fear and to sell greed. But right now, very good rebound here for the market. A lot of talk about the yen carry trade. I'm more in the camp, I'm not saying that doesn't have some to do with it, but I'm more in the camp that this is leverage short vol more than anything. And the yen carry trade is more of a, to me anyway, is more of a collateral damage to leverage short vol. Even though we dropped as hard as we did Monday, NASDAQ was down 6.5%. Monday morning, you can see the futures there. Look at that tail candle. Down 6.5. They did not trigger a circuit breaker. It got close, but it did not trigger the circuit breaker. But NASDAQ down 6.5 with the VIX at 66. So let me just visualize so you guys can see. I'm not kidding. It only has happened 4 times ever. That's massive. So you'd think the market would actually be down a lot more. It's more, to me, a volatility blow-up trade. And that is kind of the bottom line right now. But market's recovering nicely. And a couple of things we can look at here. One thing central banks are good at doing is adding liquidity, right? As we know. And one of those things may be starting to show up here. If I can get this, there we go. Fed net liquidity starting to dropped right before the market drop, and then we had a huge rebound here over the last couple of weeks. So did central banks panic a little bit? We had that talk. Japan was kind of panicking. They said they were going to raise, then they backed off. So that was very funny. You can actually see here if we go to, we flip over. Well, by the way, credit spreads. Take a look at the big move in credit spreads. I was going to talk about that. And they have come down very sharply this week. So they may have gotten a little bit of shadow liquidity going, but where's my Nikkei chart? There we go. Big rebound on the Nikkei. You can see this trend line here and hitting a perfect 618. So a technical bounce anyway, straight down into that with no bounces really outside of this. But the Nikkei rebounding pretty nicely. Also a trend line I'm watching here on the NASDAQ right now is this one going back to the October lows of last year. But nonetheless, markets are holding up right now. And the bottom line is, to me, there's a big fat line in the sand here, and that's 5,400 on the SPX. That's where we broke down from last week. And it's also a 50% fib retrace from the high to the low. So there's going to be a lot, and you got the 20 MA right in that vicinity, the 50 MA, so downsloping in those areas. And I think that's where bears are going to show up here. But we did break through last Friday's low today, and we've been trying to break through that for the last couple of days, and we had some success here. So the next big level here for the S&P is that 5,400 handle, and I do think we will get there possibly early next week, maybe Monday or Tuesday. Right now, market rebounding though, we also have PPI on Tuesday and CPI, so we get some inflation data, so we could see some volatility. We didn't have any news this week as far as scheduled economic data or anything. No, we had a few Fed heads, but that's it. So next week we'll have a little bit more volatility events, but right now the big level is 54, and that's going to tell the story. For bulls, you want to see a pullback, like say a pullback here and a higher low, or just consolidation, and then another advance. Bears, I mean, obviously you just want a rejection and then another lower high and then down. So the path is pretty simple. It's pretty cut and dry. Levels are working out really well here. We're having a lot of fun trading this right now. The volatility is amazing for trading. But that's a big level here and a huge pocket of risk here in the market. I did not think we were going to have this much volatility this quickly. I was expecting it a little bit more towards August OPEX. It came in July. Nonetheless, crazy volatility here. And right now we're seeing a VIX crush Friday. VIX down 11%. VVIX down big as well, down 12, and that is below the August 2nd candle. If we get back below 110, I think bulls are in pretty good shape, but that should bounce right there. So watching those vol products and vol indicators has helped me get a gauge of this market as well. Triple Qs here back above 450, so holding up nicely. And again, we looked at that NQ trend line. I like that. I like that it retested yesterday, and we should get more of a bounce off that. Next big level on the triple Qs is going to be right in this kind of like 450, I'm going to say 456 to 457 area. There's a gap fill around 460 as well. But and then you got the 20-day moving average. There's also a trend line here, the blue trend line, which we broke down from. That could be a target as well. So a lot of time when you break these big trend lines, these big levels, they want to go back and retest it. So I'm watching that very closely. And you can see again, to go back to that NQ chart, which is the futures, there it is right there. So we broke one trend line and we held the other. So right around 19,000 if you're futures trading on the NQ. IWM, again bouncing with everything else. A little bit softer today. I think regional banks are down a little bit, so not getting as much of a bounce, but it's still off the lows here. And just like everything else, 210 to 210.50 is the next level there for the Russell. After that, if it really rebounds, 215 to 216, but there's a lot of resistance up there. The Dow here, again, rebounding, 440K, right in there. That's your big level for the Dow. Semiconductors also rebounding, 230. That's your next level. And then, of course, that trend line. So just like the NASDAQ, that blue trend line could get back tested in the near future. And I think that's an area where sellers might step in again. Cloud software actually pretty strong here. Again, gapping down this week, but look at the weekly candle. Big, big reversal there. So good rebound. Again, that's into resistance now though. So right around 80, 250, 83, we're basically there right now. So a lot of resistance there. It's going to need to pull back and put in a higher low if it wants to advance. Dow transports, again, right to this trend line. I've been talking about this trend line for a while, and it hit, and we've rebounded. So it's kind of neutral here on the daily. Look at the moving averages, see how they're flat. It's telling you the trend is neutral, still trying to find a direction, but you do have higher lows. And if it can firm up here, I think it could have another zigzag. There's a lot of resistance between 15.7 and 15.8 on the daily chart. On to interest rates. Now, this is ironic. Well, it's not ironic. It actually makes a lot of sense, but this is something that's important to understand here. Yields up right now is actually a positive for the market. Why? Because the market is keyed in on recession, right? So if yields kind of stabilize, not saying you want yields to rip, but stabilization, right? I talked about this level 3.7 on the 10-year. It held. We gapped down into it Monday, and we V-shaped off of it. That's helped the market to rally. So for a while, the last couple of years, it's been like yields up, market down. Right now, the market's flipping. Good news is good news. Bad news is bad news. It's no longer the opposite anymore. So the market is kind of keying off of that. Also, the yield curve, 2s and 10s, backing off of the uninversion. But it's still right there. And I think if the yield curve uninverts, with yields creeping up and staying firm, that's actually a positive. It's a negative if the yield curve uninverts and yields are crashing, right? So that essentially would mean that there's a huge slowdown scare. But if yields are holding up and remaining firm with an uninversion, the market can handle that for a while. Will that last? Well, history says no, but at least in the near to medium term, that can be the case. A lot of people have lost a lot of money and a lot of careers trying to time a recession. Case in point, like right now, we've had the yield curve inverted for the last 2 years, and the market has made new all-time highs. So just keep that into consideration. But next big level here, there will be a technical check at the 20 MA here on the 10-year. But after that, around 415 to 42. So that's the big level that I'm watching on the 10-year yield. The 30s, 435 to 442. 5s, 395, and then 2s, 420. And, well, even right here at 410, but 420 is next. All right. So that's yields. XHB. So home builders finally lagging. We broke down below that breakup bar low, and we're going to close below it on a weekly close too. So definitely a weaker sign here, but the weekly chart of the home builders is still okay. Like this is still in a strong uptrend. You did have an outside engulfing reversal last week though, so be aware of that. But weekly chart outside of the reversal is still strong. The trend is very strong and up, but daily showing some weakness there, and it's not really rebounding with the market, so that is a issue. VNQ on the other hand has been ridiculously strong. Look at this, it had barely pulled back at all this week. So go figure, commercial real estate being the strongest sector. Maybe there was some of that Fed liquidity went that I showed you earlier. Just kidding. It's not actual liquidity. It's not QE. But in any case, the NQ up 26 cents, and it's above all the moving averages right now. That's more than even the S&P can say. So, all right, banks here, XLF up 9 cents today, and again, rebounding like everything else. KRE a little bit softer, so some of the regional and smaller, bigger banks, medium-sized banks not doing as well, but broker-dealers here V-shaping after a big slice. Again, next level for that is around 640 and then 650. But, everything bouncing across the board, but banks a little bit weaker. Oil's been all over the map lately. That dipped really hard Monday as well and then came back. A lot of people are talking about Middle East conflicts. I'm just not seeing it right now. I know there's a lot of talk about Iran invading, but I just don't see it in oil. Usually the market will know, and somebody will front run it big time. If you go back to, the Ukraine invasion, somebody was front running it big time, right? This was clearly getting a big bid before that. Oil is just, it's upticking. That's it. It's holding in a range. So I'm just not seeing it right now. If that changes, I'll let you know. But oil's been in a range here, and I've avoided it right now. Next level is like 78 to 79. It loses these lows, it's in trouble though. XLE holding up. Again, V-shaping like everything else. XOP, really good bounce off that ridiculously oversold condition into the 52-week lows. Yeah, OIH a little bit softer. In danger of losing this trend line now. So this wedge pattern starting to crack here on OIH. It's not the end of the world. It still has a very strong monthly pattern. But definitely weaker there on the weekly now. Uranium, again, CCJ, gapping down, rebounding nicely. It filled out the head and shoulders target last Friday. Gap down today and getting a little rebound. URNM, again, look at this trend line here. We went through it, kind of traded through it a little bit, and that's where we gapped down to on Monday. It bounced off of that. Still slightly red for the week. And then URNJ, look at this level. All-time low, 786, breakout level, and that's where it gapped down into, and it got a bounce there. So I think uranium probably due for a bounce here, a little bit more of one. Very oversold. Nat Gas, having an impressive week for once in a while. Little tail on Monday and then V-shape. I think next level here is 230 and then 240. So we had some members trading this in the trading room. I think they got the low pretty close. But here's your next levels there on the U contract. So nat gas rebounding, but then again, you know, disclaimer, it's nat gas. They could just gap it down one day. I've seen that happen a billion times. So just be aware. All right, dollar index here again bouncing this week. Let's look at the dollar yen just for fun. We looked at the Nikkei. Again, we held 142. We did slice this trend line really hard. So this is your back check. I would say 150 and then 152 is your back check levels. Big tail candle on the weekly. So this is oversold right now. And it should continue to bounce here. But big level coming up here. I do think sellers will come back in there. Dollar index resistance is at 103.50 to 60, and then 103.88 is a big level. Gold is holding up really well. There is no problem with the chart of gold right now. It's in an uptrend. You're near all-time highs. It just consolidated on the weekly. I think you buy dips in this. Just pure and simple. The only problem I have is that GDX is got lower highs here. That could just be due to leverage across the board. All equities got hit really hard this week, right? So, you know, if you're going to be in, if you're in a flight to safety, right, you're going to be in gold more than you're in the miners. That's certainly a possibility. But outside of that, it's held up really well. Silver here, less so, less of a safety play, and there's also worries about recession, this, that, the other thing. So it's going to have that industrial component, which you can see that the lower highs, lower lows. I still think it's starting to get pretty attractive, and it's, you know, it's holding support right now on the weekly. But hanging in there. Platinum has been a little bit tougher. That's working on a bear flag. We got rejected there, down move and inside bar action. Palladium, maybe a fake breakdown here. So we sliced down on Monday and then right back up. I really like this monthly chart here. So I think this is setting up here in the near future for a big run. Copper here, watching this falling wedge. It's definitely interesting. I definitely think this is getting close to a bounce. I just don't have a buy signal on it yet, but I do think it is very close. But it has fallen pretty sharply off the highs. All right, to Bitcoin here. I told everybody not to panic on this last week. Actually, on Monday, look, everybody freaked out. We went to 50,000. All we did was just go back and back check this channel low. If you look at the weekly chart, and I said this multiple times in these videos, when we were up here, I said we could easily just go back down to this lower end and then, you know, do that. If we look on the monthly, this is kind of what I'm keying off of. Guess what? This 20 MA is starting to catch up. In a month or two, it'll be caught up to price. And when that happens, this can go a lot higher. So nothing bad happened on Bitcoin despite all the panic. This is why you buy into fear and sell greed. And right back to 61,000. So through 63, it can go higher. I still think it's got more consolidation to do, but no problems here. The other coins, ETH is a little bit weaker. It went right to that level though, perfectly. And got a bid. Solana is the only other alt that I think, just off the top of my head, that's holding it really strong. I'm sure there's others. I'm just off the top of my head. That one's the strongest. But Bitcoin's fine. So again, market's holding up. Again, 5,400 is the big level. We should see that early next week. And that's going to be a big line in the sand for the market. And we'll see if vol sellers come back in. Bears got to show up here, and you want to see, you know, a hard rejection. For bulls, you just want to see a higher low or consolidation, and then we can go higher. If not, we could see some more risk, you know, kind of going into September. But you know, we'll get there when we get there. Also, remember, next week is options X for the month of August, so a lot of game playing. Going to be a lot of whipsaw, a lot of volatility. A lot of puts were bought too, and if those puts start to decay, dealers could start covering those. Or, you know, covering back that short stock, which could cause a little bit of a tailwind, but we'll see it, you know, if and when we get there. But right now, 5,400, that's the big line in the sand. And I think that's all we really need to worry about at the moment. So anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. We'll see you guys all next week.